If XRP already has legal clarity, then why is everyone still talking about the Clarity Act? It's one of the biggest sources of confusion in the XRP community today. Some people argue that XRP doesn't need any new legislation because courts have already ruled on key issues. Others insist that nothing meaningful can happen until the Clarity Act becomes law. So, who's right? The answer is more nuanced than either side usually admits. One of the biggest mistakes investors make is treating XRP and the broader digital asset industry as if they're exactly the same thing. They're related, but they're not identical. A legal decision about one digital asset doesn't automatically create a complete regulatory framework for every company, every financial institution, and every use case across the industry. That's why so many conversations online become confusing. You'll often hear someone confidently say, XRP already has clarity. Then someone else responds, no, the Clarity Act is absolutely essential. At first glance, those statements seem to contradict each other, but what if both contain part of the truth? To understand why, it's important to separate two completely different questions. The first question is simple. What is XRP? Over the past several years, there has been significant legal discussion around whether XRP should be treated as a security in certain contexts. That conversation has shaped how many investors think about XRP today. The second question is much broader. How can banks, financial institutions, exchanges, payment companies, and other businesses legally build products and services using digital assets in the United States? Those are not the same question. Imagine building a new highway. Knowing that a particular car is legal to drive doesn't automatically tell you where the speed limits are, how the traffic rules work, or which lanes different vehicles are allowed to use. You still need clear rules for everyone using the road. The digital asset industry faces a similar challenge. Even when there is greater clarity around an individual asset, companies still want predictable rules before committing billions of dollars to long-term products and infrastructure. Large institutions don't just ask, can we own this asset? They ask much bigger questions. Can we custody it? Can we offer it to customers? Can we build payment products around it? How will regulators treat these services 5 years from now? What compliance standards will apply? Those questions matter because financial institutions don't make decisions based on headlines. They make decisions based on legal certainty, operational risk, and long-term planning. This is also why many people confuse price with regulation. Some investors assume that if the Clarity Act eventually passes, XRP's price should immediately explode. Others believe that if it doesn't pass, nothing will happen at all. Reality is rarely that simple. Markets are influenced by adoption, liquidity, investor sentiment, macroeconomic conditions, and regulation all at the same time. So perhaps the better question isn't whether XRP needs the Clarity Act. The better question is whether the companies, banks, and financial institutions that want to build around digital assets need clearer rules before expanding even further. And once you look at the issue from that perspective, the entire debate starts to make much more sense. So who actually benefits from the Clarity Act? Contrary to what many people assume, it's not just about XRP. The larger goal is to create a more predictable regulatory environment for the entire digital asset industry. Think about the different organizations involved: banks, payment providers, investment firms, custodians, fintech companies, exchanges, and even startups building blockchain applications. Each of them has to answer an important question before investing millions or even billions of dollars into new products. What are the rules? That question may sound simple, but for large institutions, it's one of the most important factors in any business decision. Before launching a new financial service, companies don't just evaluate the technology. They also evaluate legal risk, compliance requirements, operational costs, and long-term regulatory stability. If those rules remain unclear, many organizations prefer to move slowly rather than expose themselves to unnecessary legal uncertainty. This is why regulatory clarity can matter even if a particular digital asset has already made progress in the courts. Imagine you're the CEO of a global bank. Your decision isn't simply whether XRP can be used. Your decision is whether your institution can confidently build payment products, custody solutions, cross-border services, tokenized assets, or other blockchain-based offerings that regulators won't challenge years later. That's a much bigger question than simply asking whether XRP itself is legal to own. Another common misconception is that regulation automatically creates demand. It doesn't. Regulation doesn't force banks to adopt blockchain technology, and it certainly doesn't guarantee that any specific digital asset will increase in value. What regulation can do is reduce uncertainty. When businesses understand the rules of the road, they can make long-term investment decisions with greater confidence. Whether they ultimately choose XRP, another blockchain, or multiple technologies depends on their business needs, not on legislation alone. This distinction is incredibly important because many investors accidentally connect two events that aren't necessarily linked. They assume that if the Clarity Act passes on a Tuesday, XRP should experience an immediate price explosion on Wednesday. Financial markets rarely operate that way. Institutional adoption usually happens gradually. Companies conduct pilot programs, test infrastructure, expand partnerships, and integrate new systems over time. By the time the public notices widespread adoption, much of the groundwork has already been completed behind the scenes. There's another reason this discussion matters. Around the world, different countries are taking different approaches to digital asset regulation. Some jurisdictions have moved faster to establish legal frameworks, while others continue refining their policies. That creates competition. Companies naturally prefer operating in environments where expectations are clear and compliance requirements are easier to understand. For policymakers, the debate isn't just about regulating crypto. It's also about where innovation, investment, and talent choose to grow. None of this guarantees that one law will transform the market overnight. But it does explain why regulation remains such an important topic. Clear rules can encourage responsible innovation, while uncertainty often slows it down. That doesn't mean progress stops entirely. Many companies continue building, testing, and expanding even while regulations evolve. The difference is that greater certainty can make those decisions easier and potentially accelerate broader participation. So if the Clarity Act isn't simply about XRP, and if regulatory clarity isn't the same thing as an immediate price rally, what should investors actually pay attention to? So who actually needs the Clarity Act? The simplest answer is this: not just XRP, it's the companies and institutions building around digital assets. XRP can continue to exist, and development can continue, but clearer rules can make it easier for banks, payment providers, and other financial institutions to expand with greater confidence. That also means it's important to separate regulation from price. Even if the Clarity Act moves forward, it doesn't guarantee an immediate rally. Markets don't work that way. Adoption, liquidity, investor sentiment, and regulation all play a role, and those changes usually unfold over time, not overnight. The biggest takeaway from today's discussion is this: don't confuse XRP's future with a single piece of legislation. The Clarity Act could be an important step for the industry, but it's only one part of a much bigger picture. If you found this explanation helpful, let me know in the comments. Who do you think benefits most from the Clarity Act? XRP holders, financial institutions, or the entire crypto industry? If you enjoyed this video, don't forget to like, subscribe, and turn on notifications for more evidence-based XRP analysis. Thanks for watching, and I'll see you in the next one.